Hi everyone, Ryan here with another Uncomplication. Happy New Year. Happy 2023. I've got a lot of cool stuff brewing and I'm excited to share some of it with you. I am going to talk about crypto today because I haven't in a while. I have some thoughts that have been percolating and I know that that is something that a lot of you are still interested in. So I will continue to share my thoughts as I have them. Um, but before I do that, I also want to say that a lot of my time has been taken up lately by art. Um, and I am actually auctioning a painting. It's the first time I've done this. It's something I've wanted to do in a while. But just to show you, like, this is just a small amount of the work that I've made in the last couple weeks. I'm getting ready for a live painting performance, I guess, at Muggs Coffee Lounge here in Fort Collins. But I'm actually auctioning this painting here, this Desert Thinker painting, which is pretty cool. It's one of my favorites, and I actually think it's going to be one of the cooler ones to offer to this audience. I've got the original right here. I'll just show you, and then I'll get to the crypto stuff. But yeah, so I think this is a really cool painting. It's got a whole backstory that I might record another little video, or maybe I'll add it at the end. But if you want to have a piece of my art and continue to support me and my efforts, this is a great way to do that. So, all right, enough of that shameless promotion. Hey, at least I'm promoting myself and not all of the scammy bullshit that is always trying to get me to promote. Okay, so let's take a look at where we are in crypto land. My big thoughts are as follows. I think that we are seeing the playing out of the scenario that I have been predicting and describing almost for a year. So if you go back and watch the videos that I was posting in December of 2021, my big crypto thesis right now is that we have had the full playing out of a cycle, a Wyckoff cycle, whereby the accumulation that happened after the last market cycle peak was paid off with, in this case, really a very obvious and full extension into the Fibonacci extensions that I think of this like loading the spring. So when you have these retracements back down, you are essentially building in space to grow. And we see this on these large scales. We also see this in smaller scales. So even when we had this retracement here, we were climbing back up before getting rejected off of some of these levels. And the biggest part that I just emphasize here is that when you have, after the 2017, 2018 market cycle peak, if we just kind of take it from, let's just do like an ABC correction, more or less, and then look at before the next big leg up, 917 days of sideways motion, accumulation, stockpiling. And if you recall, what we've been talking about with these market cycles is that you have periods of overbought and periods, or I'm sorry, in this case, at the top here, these are oversold and overbought, and it cycles back and forth. And so the Wyckoff mindset is that when it is in this sales mode, in the distribution, you want to be projecting huge gains, and you're selling this asset at a huge premium. So there's got to be that moon narrative that this is going to the moon. You're going to be rich. You should be selling your house. You should be leveraging your internal organs. You should do everything you can because this baby is a rocket ship going to the moon. That's what's happening in the oversold areas. And then in the overbought areas. And then when it is down like it is now, crawling along the bottom, it is oh my gosh, crypto is going nowhere. This was a huge scam. Everything is going to collapse. And it keeps people from buying. It keeps the price low so that over days and days and days and days, just these little moves, those that are in the know are stockpiling, accumulating. And will we see another 900 days of accumulation? We certainly might. Um, from where we are right now, let me hop over to my other chart where I've got the, actually it's the BLX, where I've got the halvings marked. Now the halvings, they do two things. One is that programmatically they increase the, or I'm sorry, decrease the payout for miners. And that isn't really a huge deal at this point in my estimation, but it serves as a useful narrative device. So Bitcoin is scarce as a digital asset. And whenever we have these halvings, we have seen the repetition of this same cycle. And it's nice that it's built in about every 4 years. It's like electing a president if you're in the United States. And if you look at just the history, big runs up. This is on the log scale, so we can really see kind of this exponential plateauing that's happening. But big run up, and then we have a retracement back down. We kind of climb, and then a big run up, and then sideways, big run up, sideways, big run up, sideways. So my thesis I'm maintaining my thesis that we are crawling along sideways. We are going to see some of these lower reaches tested and tested again. I wouldn't be surprised if we got down into the 13,000, 12,000. That's my prediction because, again, I do think that there is some validity to looking at these logarithmic regression bands. And a logarithmic regression is essentially a flattening out of the potential, I guess, for the huge, massive percentage gains that you have when something is young and low capped and volatile, where in 2011, if you were able to buy something on April 11th for 65 cents, you could have sold it on, let's see, on the 6th of June, a few months later, for 32 cents and almost 5,000% increase. And then later on, September 2013, up to that peak, in 56 days, it went up by basically 1,100%. And then a little later on in 2017, it took longer and it went up about 800%. And now, even though this last run felt really dramatic, it took, to the peak, 392 days, and it only went up 566%. So these are still huge gains compared to other places in stock markets, etc. But we are having a tapering off, so that where it was 5,000%, then 1,200%, and then 500%. I think next time around we're going to continue to see this flattening, and that makes sense based on the, I guess, maturity, you could call it, of a space like this, where in this last cycle we saw massive devastation. People were wiped out. Whole investment hedge funds and projects and ecosystems were wiped off the face of the map, and that builds in, I think, a lot more hesitancy the next time around, where even in this past run-up, people were willing to suspend all reasonable judgment, listen to 15-year-olds on YouTube making investment predictions, and sell their organs and cars and grandma's houses to FOMO into this marketplace. The next time around, that shit will still be happening, but I think it will be attenuated. I think it will be tempered by the lessons that were learned, There will probably be more regulation. There will probably be more trepidation. And so, as I've said here before, and this is why, people are like, oh, you should just do YouTube videos. It's like, how much is there really to talk about? How many times can I say the same thing? This is just what I predict, but I think that we're going to continue to see a flattening out. And this is exponential. So we're still seeing, $100,000, $200,000 Bitcoin eventually. But I think what's going to happen is we're going to crawl along the bottom here. We'll probably get down. We've already done something we've never done before, which is to go below a previous market cycle peak. And that also makes sense with the logarithmic regression, because as this band flattens out, we also punch down relatively deeper into the previous cycle's peaks here, because this is on just this exponential rocket. We didn't ever come down to the previous market cycle peak in the bear markets that followed, but this time we have. We've actually gone below the market cycle peak of about $20,000 from December of 2017. But that's also consistent with this flattening of the curve. So anyway, yeah, I think we're going to see in this washout, this literal washout of the space, the investors that were here, the exchanges that were here, the projects that were here are getting rinsed out, people getting wrecked. And that's fine, because it just creates a vacuum. And my biggest crypto thesis here is that crypto is highly, highly profitable for those who understand it and are coming to it as a place to make gobs of money off of the exuberance and desperation of a hopeful population that is squeezed financially by a shitty, failing fiat system. And so the narrative is true in one sense, but it's being used as a form of marketing in this cycle that I've been talking about, the oversold, overbought Wyckoff cycle. And so, wrapping this up here, I do think that we'll get down into these levels. I do think we'll see 15,000, 13,000. We might pop up, see 17 and then back down. But I think essentially we're going to be crawling across the bottom until we have a narrative change that allows the same cycle to repeat. And in that vacuum left by 3 Arrows Capital and FTX and Celsius, there will be new organizations setting up shop. There'll probably be more regulation. There'll be more tempering of that. I don't know, the chaos that we see in these bull runs, but it will happen again. And we'll have Michael Saylor tooting his horn. We'll be having, Plan B and all of these other crypto charlatans out screaming from the rooftops that it's the end of fiat, it's the end of central banks, and crypto is the only lifeboat to get on. And we'll probably see some extensions just like we have before. So if I just draw another Fibonacci extension here, getting back up into these same levels puts us at $160,000 Bitcoin. And that's super exciting if you've been patient enough to collect. And I'll tell you, next time we have a cycle like this, I am going to be a lot more executing of my plan. I've been dollar cost averaging in since about April of 2022, just into Bitcoin. That's really the only thing that I'm really looking at right now. If I had more money, I probably would put it into Ethereum. Maybe even, some of the other layer ones that are probably going to get another big cycle. But really, Bitcoin, I think, is the safe bet for me personally. So I'm dollar cost averaging into Bitcoin. And as we see this return to a FOMO narrative, and we see this, the RSIs on the big time frame go, increasingly back up, is when I will be selling. And again, this is all just like rehash, but if we go to the fear and greed index, crypto fear and greed index, we're still in this fear zone. We've been there for months and months. Let's look at the last 3 months. We've been fear. If we look at the last year, we've been largely in fear. If we look at all time, the fear is inversely correlated with the price. So when the price is on the rise, greed is high, and when price is down in the accumulation zones, fear rules the day. And so when people are afraid is the best time to buy. When people are greedy is the best time to sell because they'll overpay for it. So, if you watch back through past videos, I've talked about different strategies for dollar cost averaging in and out based on the fear and greed index. I still think that those kind of long-term, patience, detached, emotionally mindsets are the way to go, just based on what I've now experienced and witnessed in crypto. But I have no doubt that when we get back into the next market cycle, all of the same tricks will apply, and probably even more refined. Last time we saw all of the NFTs, and I had friends and, people, acquaintances that were putting thousands and thousands of real dollars into digital pixel art because it was all wrapped up in this fever of Bitcoin going to the moon, digital assets, digital this, digital that. And so you can be prepared that next time around, there will be all kinds of enticing, shiny slot machine games that are telling you to put in your quarter to win, thousands of dollars. And I think the discipline and the patience to not get suckered into those traps. If you're hearing about something pumping, it's because it was already accumulated. That's the whole point. If you're hearing about it as an exciting opportunity, it's already too late. So that's partially why I'm making this video now, is because I think it would be irresponsible to talk about crypto so much in these distribution zones and not be talking about it a little bit in the accumulation zones, even when it's boring. This is the time when I am kind of buying and stockpiling up, not because I think this is the best long-term investment, all of these different assets. I just think that this is a cycle that gets played and played and played again. And next time it comes around, I'll be excitedly applying the things that I've learned to see the things I'm buying now when everyone's afraid be sold for much higher values when everybody is FOMOing in, because Tesla just announced that Bitcoin is replacing solar power, or whatever crazy, BS marketing is derived. There'll be low cap coins, there'll be meme coins, there'll be all kinds of shit. And those can also be played. And maybe, as we continue on this channel, I'll be actually looking at where do I think there are opportunities for, wouldn't it be awesome to have bought Cardano when it was at 2 cents or whatever, what are those opportunities now where a few, $100 even in the right predictive, this is going to have a FOMO event, not because it's super valuable, not because of the space and the infrastructure and, this is what's going to power the world's payments or blank, but just this is likely to be used by others to sucker in the majority who don't understand how crypto works with a, Coinbase ticker that says this thing just pumped by, 30% this morning, you should buy it now. What are those? How can we identify them and be prepared now to, have these little stockpiles of the stuff nobody wants. So when this whole thing repeats, which I do believe it will, we can benefit. So I guess I'll leave it at that. The reason why I haven't been making more crypto videos is because a lot of this is a rehash. And if you go back and watch, even a year ago, I was saying a lot of the same things, but now we're also seeing it play out. And it is, it's both sad and satisfying, I think, to see the people that have stuck around and are making, daily videos, and they're talking about this, that, and all these little moves. And really, it's a bigger zoomed out picture. I really believe that. And so as much as, even back here, I remember watching, some of my favorites in the space, everyone's talking about, is this going to be, uh, a massive recovery, and we're only at phase, we're only on the third wave of 5 Elliott waves, or yada, yada. Everyone is always wanting to rush it and to get back to seeing their portfolios come back up. But I think just, stepping back, making art, living your life, being patient. We still probably have, by my estimation here, 400 days, 420 days. My values for these halvings are never exact because they kind of shift and move as I scale my chart. But in general, we've got, over a year before we even get to the next expansion phase. So be patient, go outside, hug the people you love, and yeah, make art. And if you want to support me in making mine, you can follow me at thinair on Instagram. And I'm posting a lot of the cool paintings and things that I'm doing. And then if you want to actually support me and buy a painting, you can do that on eBay, and I'll post the link in the description. So yeah, I appreciate all of you, and until next time, love and rockets, y'all. Cheers.